is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome to another episode of DeFi Decoded. My name is Alex Tapscott here with co-host Andrew Young. There's an old Chinese proverb, may we live in interesting times. These certainly are interesting times for markets everywhere, and that's as true in crypto as it is anywhere else. Fortunately, we have just the right person joining us on today's discussion to walk through his thoughts on the market and also to share some big picture theses on crypto in general. Scott Melker, as he is known, the Wolf of All Streets, is a trader and investor and the host of the very popular Wolf of All Streets podcast. He's also the author of the Wolf Den newsletter and a very prolific writer and thought leader in the crypto space. He has been featured on Fox Business, in the New York Times, Forbes, Business Week, the Wall Street Journal, CoinDesk, Cointelegraph, and much, much more. I think, Scott, you're almost at 900,000 followers on Twitter. Great follow. I strongly encourage people to check out Scott. I was actually on your show a couple of weeks ago, and so grateful of you to join us here today. So, Scott, looking at the tick by tick here today, I think it's Jan 25th. Bitcoin bottomed at 10.02 and equities bottomed at 10.06. Is Bitcoin the new leading indicator for stocks?
First of all, thank you guys for having me on. And it was amazing having you on my show. It's one of the more popular conversations and episodes we've had, actually. So thank you for that. Very honored to be here. But no, I don't think that's the case. And I think that that's kind of become a funny meme, the correlation argument. And I very strongly take the side of Bitcoin being an idiosyncratic asset that is non-correlated to other markets, except for, of course, the caveat that everything is correlated and goes to one in an extreme risk-off environment. But it's what happens after that and the rest of the time that people seem to discount, right? Everybody loves to say Bitcoin's correlated to stocks, they're trading together. What about the other 99% of the time, right? They're not. So yes, you have these temporary correlations, but to me that appears to be a random walk, right? Assets can only basically go one of two ways, up or down. Those paths are going to meet for stretches inevitably over time. So historically, Bitcoin mathematically and rationally has been an uncorrelated asset for most of the time. And it's funny now to see the people who depend on that correlation sort of kicking the can down the road with their argument just constantly changing. It's like moving the goalposts back constantly. First, it's they're tick for tick, they're trading together, right? That was all of sort of last week. Then the stock market closed and Bitcoin dumped all weekend, right? And so opened up, Bitcoin went up right when stocks started to drop on Monday, right? Bitcoin definitely inversely moved to stocks. Then it became, well, Bitcoin was a leading indicator. It dumped all weekend and now stocks are dumping. Okay, so anyone who believes that Bitcoin's a big enough market to determine what stocks do, I don't know. I've got a condo on the moon to sell you. But, and from there on, then it, the argument just continues to change. In my opinion, yes, they trade sometimes the same, but Bitcoin went up yesterday while stocks absolutely dumped, right? And so if we're doing the tick for tick thing, it's to me pretty clear that they're not correlated except for in brief moments.
Yeah, it's nobody ever points out the fact that, for the past 5 years, Bitcoin's had an average 0.01 or 0.1, correlation to most broad equity indices. Right. And, the 4 months leading up to this period of correlation was a time when actually Bitcoin went inverse. You never hear from people when it goes inversely correlated, only when it goes to its tighter correlation. Andrew?
And correlation is not something to be determined, in my opinion, on a daily basis.
Yeah,
right.
Absolutely. Yeah. One of the interesting things, just talking about correlations, is the fact that during this sort of mini correction of only 50%, NFTs have actually held up reasonably well, which is a pretty surprising sort of movement in the market, given that NFTs have been typically sort of very risk on. What do you think about the sort of correlation within crypto assets generally, and just obviously during this sort of market downturn?
Well, a few things there to parse. First, NFTs are largely defined by Ethereum value. So if you want to peg them to the dollar, they haven't performed exceptionally well. Probably. I'm not saying that that's the proper or improper way to value them, but if your Ethereum is down 50% and your NFT is up 10% in Ethereum, you're probably not doing that well if you actually have to cash out to dollars and, I don't know, pay your taxes on that profit or loss, right? That's one thing. But second, I think that this sort of lends to a more important topic, which is the general state of the market and how we should approach it as investors. We've always just had this large bucket of cryptocurrencies, right? And I think it's time we absolutely throw that term in the trash and light it on fire, right? 99% of them are not currencies, and most of them have absolutely nothing to do with one another. And certainly almost none of them have anything to do with Bitcoin, right? So I think that we're in a state now where Bitcoin should be completely separated, right? We don't talk about investing in gold and investing in Amazon in the same breath. And I don't think we should talk about investing in Bitcoin and investing in Ethereum in the same breath. I think that would eliminate a lot of the tribalistic mentality in the space and probably help advance the entire space together. So I think we need to basically put Bitcoin in its own bucket. The problem there is, obviously, when Bitcoin moves, everything generally moves with it, right? You see this sort of Bitcoin dominance starts to rise, the correlation of the assets within the cryptocurrency market sort of all dump or move together. That's not going away. But in 2017, 2018, there were basically no exceptions to that rule. And like you said, NFTs have been an exception to that rule. During 2020, when the market wasn't exceptional, we had a DeFi summer where coins were going 100x while Bitcoin was chopping sideways or slightly dropping. We had this NFT summer. We've had this absolute boom in the metaverse, which happened while Bitcoin was sort of starting to draw down already in November. So we are seeing these sort of buckets or genres of coins and projects and protocols find their way even when Bitcoin's correcting. But once again, just like you can say that stocks are temporarily correlated to Bitcoin, when Bitcoin really, really moves, you're going to see that reverberate around the entire market. But I really think that it's very misleading to put everything in the same bucket at this point.
Yeah, I mean, I think the fragmentation of the market into different categories that each can perform in their own way is one of the big signs of evolution, I think, of this whole industry. In 2017, 18, everything went up together and everything went down together. And, the so-called shitcoins, the ones that probably didn't actually have any long-term viability, still ended up performing really well. Now, I think that in any market like this, where there's lots of exuberance and price discovery and new technology that's going on, I think the rising tide can lift all sorts of different kinds of boats. But in general, I would say that the story of the last year has been one where quality names, broadly speaking, have finally started to find fair value in the market, whatever that is. And I think the only way you can look at it is on a relative basis to other coins, because maybe these things are massively undervalued altogether, or maybe they're massively overvalued. I don't personally believe that, but we're in this stage of price discovery. And I'm wondering, thinking about 2022, maybe it's another year where the chop is not in Bitcoin, but the chop is in Ethereum, right? Maybe we're range bound here, $2,500 or whatever, 3,000. I don't know what range you want to set, but within that, there's all sorts of secular bull markets happening. So with that in mind, what are some of the big trends that you're thinking about for the new year?
Well, I think that we are starting to see relative strength based on fundamentals. I know nobody ever likes to talk about fundamentals in crypto, but as you pointed to, I'm a big fan of investing in all of the layer ones, right? Because you get the advantage of everything that's built on them. Why try to find the best NFT project or find that one unicorn project in play to earn or the metaverse if I can just own the protocol that it's being built on, right? And so I think that's why we saw this massive L1 boom throughout the year, is because there are actual metrics to invest in on those, right? Even in this drawdown right now, we're seeing Phantom perform particularly well. Their TVL rose by 50% in a matter of a week, right? Almost to $100 million. There's obviously real development there. There's real money going into it. And that clearly is reflected in the price of the coin and how it's performing in the market. So my opinion for the year, I'm still very convinced that investing in the strongest layer ones in general is almost like buying an index fund, but getting exposure to each of them because we'll probably live in a multi-chain world and none of them will win, right? Maybe it's a very unpopular statement, but I don't believe that any layer one right now, and it's not even close, can operate at scale. Solana's been proving it over and over again. Ethereum, we've obviously been seeing it for years, the problems with gas fees and speed. And what one gains in security, one sacrifices in speed, and so on and so forth. So I think that one of the huge narratives this year will be either improvements on these layer ones or any layer two that offers some hint at scalability, speeds them up, makes them cheaper, roll-ups, ZK snarks, you name it. Right, I think those are going to be a huge narrative this year. We need these blockchains to be able to scale to mainstream adoption. So whatever makes that happen, and it will, is going to be the winner. But I think right now we still have sort of the same baskets of bullish narratives. NFTs. You want to be invested in some way in NFTs. I don't think that's by buying some Lazy Lion or Pudgy Penguin or Angry Aardvark or whatever they're called. But I think, owning these L1s where NFTs are being built and distributed, that's how you want to do it. Metaverse is going to be a huge narrative into the next year, inevitably. We know that. Play to earn gaming is only in its infancy. I mean, Axie Infinity is really just an incredible example to me. It's a subpar game. It's difficult for the mainstream to access. You have to understand how to get a MetaMask wallet, move Ethereum into it, open a Ronin wallet, transfer your funds, and then actually start playing the game. But people with no knowledge of any of that in the Philippines are finding a way because it's a better option for them to earn a living than the job that they had before. So when you see that people are making it happen even in this difficult environment, imagine when those games are as simple as, turning on your machine and playing Fortnite or Call of Duty or one of these popular games, and then you can actually make a living doing that. So I think that those narratives are going to be the ones that push forward regardless of the price of Bitcoin or Ethereum.
You mentioned,
I think
oh, go ahead, Andrew.
Sorry, we've been flagging sort of the multi-chain thesis and this idea of multiple layer ones competing with each other on this podcast for a long time. We're definitely strong believers in that thesis as well. One thing we've sort of thought about though is how is the layer one wars going to sort of play out? And I'm kind of curious to hear your opinion on that. Are you taking more of kind of a sort of investing in a number of different ones across the board and sort of see which one works? Or like one thing we've been sort of talking about is how we think a lot of app specific or use case specific blockchains are going to grow a lot. You mentioned Axie Infinity, obviously, which just came out with the Ronin sort of sidechain or blockchain. Just kind of curious how you're thinking about sort of that trend and I guess just overall how the L1 thesis is going to play out.
Yeah, my thesis is that actually all of the bigger names will succeed. I just don't know how or when. So I want exposure to all of them. But when I talk about multi-chain, like I said, none of them can scale enough that one can win anyways. But I just think that each one will effectively find its niche and its use case, and that the key then will be interoperability. So if we're talking about one of the buckets that I kind of forgot to mention there, Cosmos, Horizon, these companies, these protocols that make these chains interoperable and be able to speak to one another is going to be an absolute huge narrative going forward. If we operate under the assumption that not one can win and none of them can operate at scale, then you have to assume that all of them are going to need to be operating and finding their niche and then working together. And that's what I think largely is going to happen. So that's my thesis. I don't know. I can't tell you if Solana is going to win gaming and Elrond is going to win the DEX war and Cardano is going to actually have something work at some point. Maybe I think it could happen, apparently. I don't know who's going to win and in what, but I know that each of them is going to find a way. I mean, I particularly love Solana, obviously, even with their problems. I think that they're a great team, tons of money behind it, and it's been proven largely successful. I love Avalanche. And I think that the ability for, institutions and such to create private chains on Avalanche and build out their own blockchains is a huge boon to scaling. So like I said, I think each of them sort of has their strength, and probably many of them have weaknesses that we don't even know about yet. And they're each going to win in their own way.
You mentioned Cardano versus Solana versus Avalanche and these others. And, you know, Solana has been really successful in scaling and driving user and adoption capital and excitement and interest in projects and so forth. But it's also had its share of issues, you know. And I saw a tweet the other day. It was like, every time you ask a Solana person about the network, you know, having to pause for whatever reason, they say, what do you expect? It's, you know, this network's in beta testing. And it's like, well, you can't really beta test a $75 billion network with billions of TVL and all these users and people depending on it. Like, the stuff needs to kind of work at a certain point. And Andrew has brought this up before about, well, certain kinds of transactions, if they're high dollar value and they're being held for long periods of time, are more suitable to more decentralized chains with greater security. Maybe that happens on Ethereum. But if it's, you know, a gaming, you know, play to earn or something like that, or NFTs at a small dollar value, you can afford to do it on one of these less secure networks. But they still have to have a minimum viable level of security and minimum viable level of functionality. And I wonder if that's a thesis that kind of plays out this year. Not to stick out, like to point out any specific protocol, but, you know, the criticism of Cardano is that it has huge market cap and it's got no application layer really to speak of. It's got a lot of peer-reviewed papers, but maybe they've been getting the tech right, and that this is the year that it happens. I mean, that would be the ultimate contrarian view, I think, for the year, would be to be like a Cardano bull. I don't know, but just sort of throwing out a couple of ideas. You know, you mentioned a bunch of different themes. The idea of multi-chain maximalism is a thing that we keep coming back to. We do have a lot of friends in the Cosmos community here at DeFi Decoded. And so we have had a bunch of folks on already, Ethan Buckman, Sunny Agrawal, Peng Zhang, and others, and keep coming back to this idea that, like, okay, if we're correct that applications are going to scale users and adoption because they're really fun and useful, you know, to engage with, then we're going to need all the block space we can get. And Andrew, AY here, Andrew says that, you know, block space is going to be the most scarce resource in computing and business probably for the next decade or so. So I think it definitely supports that argument. I'm wondering, like, what do you think about that idea of multi-chain maximalism?
I 100% agree with it, and there's nothing that infuriates me and more than tribalism in crypto, and nothing I believe that holds back the space from reaching mainstream adoption. Right, that sort of base layer toxicity that we have that's pungent and very ever present when a new person comes into the space, I think can be very alarming and keeps them from being passionate about it. And the reality is that crypto as a whole is way too small for there to be people arguing about who's going to win within it. We all need to be cheerleading for just somebody to win, or for all of us to win together. And so that's why I've been such a huge proponent of multi-chain maximalism, as you put it. I love that term because I think that it describes my thinking very well, and that I agree with what you're saying. And there's so many reasons to not believe that a single chain can do everything. They just can't. They just can't. It's not going to happen. And so focusing on how they can work together, and to that end, how we can work together, I think is the key. There is hope, though. I will say, one of the biggest surprises to me of last year was when the infrastructure bill was proposed and had sort of that one sentence about crypto that set the world on fire, froze the infrastructure bill for 4 days. But at that point, every crypto enthusiast, regardless of their favorite coin or favorite protocol, came together to fight together to make sure that, even though we failed for now, to make sure that that bill did not pass into law. Of course it did. But it did show that we can come together as one huge community when we're threatened as a whole. But I believe that what's good for one is good for everybody at this point, and that there's no reason to be competitive unless it's just competition breeding better technology, the good kind of competition. I don't believe we need to have that sort of tribalism at this point.
Yeah, I mean, we're definitely multi-chain maximalists on this podcast. So you're preaching to the choir, and I think a lot of sort of our listeners are as well. Switching gears a little bit, obviously the market's gone through some short-term turmoil. We talked a little bit about, before you sort of jumped on the podcast, about how a lot of this is sort of Fed fear-driven inflation. Kind of curious how you look at the macro landscape and how that sort of impacts crypto, both in the short term and maybe over the course of 2022.
Well, I'll tell you that on Monday, January 24th, yesterday, was the most heavy buying I've ever done in both equity and crypto markets in my life, right? The caveat being that I'm not trying to call the bottom. I just believe that at some point prices in both will trade much higher than they are today, and I'm not trying to find the bottom, right? And just in case everything goes up from here, I want to be a part of it, right? And that includes leverage longs on both Bitcoin and Ethereum. So I had quite a bit of conviction because that's something that I rarely do, right? So I agree with your thesis. This is largely overblown. You look at the crash in 2021 in May of crypto, there was endless negative narratives that were somewhat crypto specific. They were FUD, but there were endless narratives, right? We had China, that's not FUD, that was real. China banning crypto, of course, Tesla ceasing to take Bitcoin payments, which is nonsense. And then the energy debate that seems to have largely diminished as we've seen miners move to the United States and other countries and start to focus on renewables. But that was a lot of negative things that were specific to crypto. Now we're seeing an equivalent crash, although that one took 10 days. People forget that we were just here 8 months ago, right? We just did this. They're freaking out like it's the first time we've ever had a correction, but we just did this and we went from 60 to 30 in 10 days in May, right? This was a much slower bleed, which maybe is more painful. But the only reason that anyone can give is because of the Fed, right? And so I did some digging. We've had 12 Fed tightening cycles since the 1950s. This is not crypto specific, obviously. 11 of those cycles, I think barring 1972 to 1974, stocks have performed well over the period of that tightening. I think you see this panic at the beginning, and then it's all priced in, and the market realizes it's going to happen, and then people go back about their business. And I think that if crypto is the baby that's being thrown out with the bathwater here for something that's kind of irrelevant, that we should be at least bottoming soon and should see price appreciation throughout the year. Come October, if they're hiking rates, is that still bad news when you've known for 9 months that they were going to hike rates? No, right? It should be priced in my opinion. So I'm not particularly concerned about the market. I see these dips as massive buying opportunities. Listen, we all know that wealth is made in the bear market and at the bottom, not at the top, right? It's made by where you buy, not necessarily by where you sell. And so it kind of gets me excited. Also, I have to touch on something that kind of I've been thinking about that drives me a little crazy, which is as Bitcoiners, and this applies to myself as well, but as hardcore Bitcoiners, called maximalists, whatever your view is, you're obviously against money printing, right? The very core of our thesis is that government is bad, inflation is bad, money printing is bad. Now we've come to this crossroads where the government says, we're not going to print as much money anymore. Inflation is a problem. And now I see the Bitcoin community kind of angry that it's stopping because it makes the number go down, right? And you sort of have this rubber meets the road situation where your personal conviction about money printing and what's in your self-interest are in conflict. And I think that's going to be interesting to see how that plays out, because in theory, we should want governments to be more responsible to curb inflation. They won't. This is a thought exercise, right? They won't. But by doing that, we have to admit that maybe then the value and price of Bitcoin drops, which nobody likes. So to me, it's kind of one of those, which one is it? I believe that the Fed will continue to print money. We have an election coming up. This is a temporary thing. They're not going to let the stock market crash. But it's an intellectual exercise, I think, in why we do this and why we care about Bitcoin in the first place. If we're against inflation, shouldn't we be excited that the government's curbing inflation? Seems like now that the money printer is turned off a bit, or is going to, that people are getting a bit skittish about that argument.
I love that. I've never understood that about gold bugs either, why they're like always railing against the Fed. It's like the only reason that the gold has any bid is because there's people like you who don't trust central bank. I mean, it's funny. It's a funny way of thinking about it, for sure. Andrew, do you have any other questions on that topic?
Yeah, no, I think I sort of agree. I think there's two things. Like going back to your previous point about sort of correlations within the crypto space, I totally agree. Like, I think a lot of the small cap cryptos should almost be valued like sort of, they're essentially liquid VC, liquid startups in a way. And so from that perspective, obviously you're sort of, if you're thinking of valuation, you're doing the market's doing kind of an implied DCF of future earnings and sort of overvaluing future growth, or sort of pricing these sort of smaller cryptos based on their future growth. So if interest rates go up, you have to discount sort of that future growth more. And so I think one thing that's been sort of interesting is like you said earlier, though, we're starting to actually get almost like value stocks within crypto, like things that actually have protocol earnings, which should sort of, in a relative sense, do well during sort of a market correction that's driven by increased interest rates. But we haven't really seen that too much yet. I do want to kind of actually ask, how do you think about sort of, I guess, valuation within the crypto space? Are you mostly looking to trade? Are you more of a trader, or are you looking more at like thematics? You sort of talked about fundamentals. I'm just kind of curious. I just want to dig a little bit more into sort of your trading and investing style.
Sure. And to the point that you just made, we also sort of have this version of our own dividends through staking, right? So that you can not only find something that has fundamental value, you can stake it and support the network and actually earn a yield on that, which, if you're making a comparison to maybe how stocks are valued, you can consider that somewhat of a dividend. I would say that, I started in the crypto market very much as a trader. I came from trading Forex and stocks, and crypto was this sort of land of unicorn 1000x pumps that I found out about in 2016. And luckily, I just timed it very well and did well initially. But I think, like most, you get orange pilled somewhere throughout that process and start to actually realize the fundamental value of the things that you're investing in. My approach was always 70% investing, 15% cash for buying the dip, and 15% for trading and speculating, right? And so for me, that was 70% Bitcoin, 15% dollars, and 15% all this other stuff I was trading. But over time, that has changed dramatically, not the overall portfolio structure, but what falls into each bucket. The 15% cash became 15% USDC, earning 10.5% yield, sitting on Voyager, which is the most incredible innovation in the history of crypto, maybe. People, controversial topic, but the fact that I can earn 10% on my dollars is one of the most exciting things that's ever happened, right? Because in 2017, selling into US dollars when you were angry about dollars and believed in Bitcoin was a very painful thing. Not as painful when you can earn that yield. But what happened for me was all of these, call them trades, even though I'm a swing trader, a longer term trader, that did exceptionally well. I always scale out on the way up generally. But then the last 20% of that position, if I'm up 10, 20, 50, 100x sometimes, goes into my long-term investment basket. So that long-term investment basket, my 70% is now less than half Bitcoin, right? There's a huge chunk of Ethereum, and then sort of, 1-2% of it is each of these positions gone well over time. And over the last year, I've also added a sort of basket of those layer ones into that long-term investment. So listen, I'm a trader at heart. I've slowed my trading quite a bit. I don't have the time to sit there and stare at charts all day. So my style is very long-term trades. But, even at the heart of my trading degeneracy, if you want to call it that, I would say that I always viewed myself as an investor first and was smart enough to know that the 70% I was putting away as investments was probably going to outperform my trading even at my best. And so I always encourage people, even if you think you're going to be a professional trader or trade full time, should not be with a large percentage of your capital.
You mentioned stablecoins and earning a yield. We actually haven't talked much about DeFi yet, but I'd love to get your view on some of these protocols. I mean, we talked earlier about there's a bull market somewhere in crypto, or at least there has been for the past 3 years. And, there was the DeFi summer on Ethereum. And as much as DeFi as a whole has grown significantly in the last year, TVL is up 10x to $250 billion. Those darlings of the DeFi summer in dollar terms haven't actually performed as well as the rest of the market. So what are your thoughts on DeFi? Was it just, I just want to get your view on kind of where we are right now and what you're seeing going forward.
I think DeFi is exceptionally early, but no less exciting than it was during that summer. I just think the nature of crypto is that, people go swim towards the shiniest object. And right now, maybe that's metaverse and NFTs. So some of the heaviest development that was in DeFi has moved there. We always have this sort of phenomenon of first movers in the crypto space. I brought up Axie, for example, right? Axie made this massive move up, and then all of the other sort of play to earn and metaverse, call them whatever you want, plays started to catch up while Axie sort of retraced. I think that's sort of what you've seen with the compounds and balancers and Aves and sort of the protocols I'm assuming that you're referring to having not moved as much. But that doesn't mean that they won't again, right? Those now have fundamental value. They have tons of value locked. And I think that they'll do exceptionally well as people begin to trust them and move. But if we're talking about DeFi in general, I think it's still so early. The amount of products that should fall under the basket of decentralized finance that have not really even been created in crypto yet to match what exists in the legacy market is astounding. I mean, even the basic things like insurance, right? I mean, we haven't seen anything robust sort of in that space, but imagine a world where you have something, equivalent to an FDIC on your investments in DeFi, and that you would, if there was a rug pull or a protocol failure or some sort of strange liquidation, that your funds were secure and you would get them back. Imagine how much money would start pouring into DeFi in search of yield. I mean, the whole world right now is in search of yield. That's the bottom line. And the place to find that in one way or another, whether you call it CFI, DeFi, whatever it is, it's there. I have some money in protocols here and there, but sort of like the way I approach my risk with my portfolio separation, it's always going to be small amounts spread all over the place, right? So that one hack doesn't fundamentally destroy my entire portfolio. But I really actually am a pretty big fan of the centralized, you call them CFI, I guess, as people like to call them. Like I said, I'm a huge fan of Voyager. I have quite a bit of money there. I've used Celsius and Nexo. I used to use BlockFi before their yields evaporated. And so, I believe in spreading it around and testing all of it, but I still think that people should realize DeFi is very, very much in its infancy and will become an absolute powerhouse parallel rail to legacy financial systems. I don't think it will replace them. Maybe I'm not, maybe I don't have a big enough imagination, but I think for most people in the world who are underbanked or unbanked, or those who just can't access any sort of yield, they're going to look to DeFi as it becomes more mature.
Yeah, I mean, I think that the idea of giving people a way to own dollars and earn a yield on them is kind of the holy grail, actually, for a lot of the unbanked around the world. I think some of these other more fun and esoteric things there's a huge market for them, obviously, because there are lots of people in search of investment returns and are, speculating or are looking to capture like outsized yields above whatever their targets are. And that's a huge market too. So I see demand coming at DeFi from various different kinds of angles, for sure. I was just reminded of looking at the charts here, things are ticking back up. And I know that, at some point there's going to be a bunch of retail traders piling back into crypto. And it reminds me of this funny quote from this guy, I think his name's Morgan Housel, who says that stocks are the only thing where if they put a for sale sign up in the store, that everybody runs out of the store. And I think the same is true for crypto, right? So it's worth keeping that into perspective.
Retail's going to buy again. Retail's going to buy again at 50,000. They're the ones selling now, right? Unfortunately, it's absolutely. I joke about that all the time. People will literally buy like a pair of pants that doesn't fit because they're 60% off and their shins are showing because they got them on sale, but they won't buy their favorite protocol down 70%. Just doesn't make any sense, right? I love that. Yeah, it just doesn't make any sense. I want to just touch on something you said before because it's so important. As Bitcoiners, sort of the narrative coming into, I would say 2021 was MicroStrategy had bought Bitcoin. Tesla's going to buy Bitcoin. All these companies are going to buy Bitcoin. And none of that played out in 2021. I assume that the whole narrative of 2021 will be Bitcoin. And it ended up being the amount of massive venture capital money pouring into Web3 and all of these other protocols, right? That's where all the institutional money has sort of come in. So I think that obviously kind of damages that putting it all in one basket thesis as well. And that maybe, Bitcoin is not the shiniest object right now, as much as I do love it. But also speaking of earning yield on dollars, I've had friends that I went to college with that I've tried to get to buy Bitcoin for like 5 years, right? Buy Bitcoin. Nah, I'm not interested. These are Wall Street guys. They get it, right? Hedge fund guys. How did I finally get them in? Either they found NBA Top Shot and started buying NFTs and thought that was cool and backed into crypto that way, or I told them that they could earn 10% on their dollars. That's the thing that was the most exciting to them, right? Not Bitcoin protecting their value, but earning a yield like we did in savings account as kids is what excited them. And you take that to around the world. We all want to believe that everyone is like El Salvador and they want Bitcoin to protect the value in an inflationary environment. The reality is most people want dollars and don't have access to them, and now can just go download a wallet somewhere and buy USDC or USDT and hold dollars and earn yield on them in a country where they otherwise didn't have access to dollars. So I think stablecoins are one of the biggest stories in crypto that nobody's really telling in that regard.
I know we'll have to get to $1 trillion of stablecoin value before people start to pay attention. I mean, we've done, looking at the analysis, people think stablecoins are still mostly Tether. Tether is now like a minority of total value. The fastest growing stablecoins are USDC and our decentralized stablecoins like UST and DAI. And, at $165 billion starts to raise a few eyebrows. Once we get to that $1 trillion level, I think you're going to begin to see it really impacting payments and banking more generally. And in terms of the topic of VC investments, I had one of the people in our team here at the Digital Asset Group just put together a list of all the fundraisings that have happened. And, there was $25 billion of venture funding allocated last year in 2021, but there's probably going to be even more allocated in 2022 because a lot of the biggest fundraising events happened at the end of last year or are about to happen. So, FTX announced a $2 billion fund. I think Andreessen has a $4.5 billion crypto fund that they're looking to launch this year. So pretty remarkable when 2021 was more funding than all previous years combined. This year could be in excess of that. Now, some people make the argument, VCs raised their biggest funds at the top of the market. But, in my opinion, we're just getting started here. And I think 2022 is going to be a really interesting year. I used to be on an equity desk back in my previous life. And, for most of my career, the central bank sort of drove returns in the market pretty much. And with rates rising and with currencies, decoupling, all of a sudden it's a trader's market again in stocks. And I think the same thing is true for crypto assets as well. It's not just like one big levered beta story. You're not just buying it all and just it's all going to go up or it's all going to go down. There's real opportunity for expertise and segmentation. So it's going to be an exciting year for sure, Scott. Thanks for joining the show and for providing some much needed clarity and perspective on everything. We really enjoyed it. I mean, I certainly did. I know Andrew did, and look forward to having you back soon. So may the trend be your friend. Good luck out there, and we'll see you next time.
Thank you, guys.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.